All right, so let's talk a little bit and then we're going to get straight into this presentation. This presentation number one is basically just to inform you on how it works so you can decide if this is something that you want to incorporate with your trading or not. So I want to make that very clear. I am not providing trade ideas. I am not doing any of that. However, you are going to be able to leverage what economy provides to do this, and I'm going to explain how. So, number one, if you're in the US and you trade prop firms, for example, there was in the past couple of months, there's been a lot of changes and it's been really frustrating for a lot of people due to MT4 not working out, licensing issues. If you're overseas, you pretty much have not had this going on. But if you are in the United States, we've had to adapt to different type of softwares to trade on, and some have done really well adapting and some haven't. So it just, it is what it is. However, since that has happened, a lot of Forex traders have transitioned into futures. Now, futures, in my opinion, is like Forex and stock options had a baby, and that baby was made, and it's like on steroids. It's like Superman. It's like the Superman of trading. So if I had to personally explain my tier, futures would be number one, stock options number two, and Forex number three. Now, I can say this because I trade all of them, including crypto, but crypto would not apply into this, even though you can trade crypto futures. So I do want to say that. As far as making money and the amount of money that you can make, that's my that's my list. That's how I have it. That's my, again, my preference. In regards to learning how to trade, I think stock options is the easiest, then futures, excuse me, then Forex, then futures. So I think futures is a little bit harder, but if you have Forex knowledge or a Forex background, this is going to work in your favor. So it is a lot more volatile, which we're going to talk about. And one great thing that is going to be awesome, let me ask, how many of you use Idris's gold trades? How many of you use the gold trade ideas or Pluto's gold trade ideas? Not Pluto Gold, but Pluto's trade ideas, excuse me. The cool thing about this is that if you trade gold, you can trade gold futures. So I have a couple people in my stock options group that trade gold future contracts or stock option contracts, because there's also futures contracts like stock option type contracts. But you can trade it with futures and it pays absolutely amazing. You can also trade, like for example, I love to trade not like the Nasdaq, which is QQQ with stock options. Well, we can trade NQ. We can also trade ES, which is like your SPY. And if you like to trade US 30, you can trade your YM, which is the Dow Jones. So you actually could utilize the tools that economy has already provided, all of the amazing educators and the trade signals that are given, to use this in conjunction with what I'm going to show you today. So today is just to provide some enlightenment. Our next meeting we're going to have, I believe, is tomorrow. We will discuss charting. If you're a part of my stock options group, you already know what to do. But if not, then we're going to just talk about it. We do utilize smaller time frames. So with that being said, I am going to mute the chat. Like, I'm going to turn it off because I'm going to focus solely on educating. There is a Q&A set up. You are more than welcome to post your question there, but I'm going to wait till the end to answer any questions so we can just get through the material. So I really hope that you guys at least take a moment to look into this because it's great. Let's get to it. My company name is Millionaire Trader Society. That's why you see that there. All right. So a future contract is a legal agreement to buy or sell a particular commodity asset or security at a predetermined price at a specific time in the future. So if you watch the CME training that I provided in the stock options group last week, that training went over it. So it explains to you that there's a contract where, for example, if, hold on, y'all. All right, here we go. If there, like, you can trade coffee, soybeans, orange juice, cattle. With futures, you can trade everything. And what happens is there's a transaction, and that transaction has to take place by a certain time. So for example, right now we've been trading June contracts, and at the middle of the month, that's it. Whatever price is at the time of that contract being closed is what the transaction is going to cost for the parties involved. This doesn't apply to us. That's why I told you guys to watch the CME training, because I'm not going to get into the fundamentals of this. Like, this is not going to pay my bills. I want to show you what's going to pay your bills. All right. But examples are your E-mini S&P 500, your NASDAQ, your oils, gold, currencies, and commodities. You can do grain, livestock, energy. This is where the big dogs make their money. Now, I've had the pleasure of working with the vice president of a major firm many years ago, and he had put me onto this, and it was absolutely amazing. Like, I've watched hundreds of millions of dollars be traded, and the liquidity in this market is unreal. The money is something like you've never seen before. You probably have heard Mark Cuban, I think that's his name, Mark Cuban, talk about futures. Like, he invests a lot of his money into futures and stock option contracts. This is the bread and the butter, okay? So let's get to it. Now, the pros to trading futures: the spread is minimal, it's regulated, low trading costs, and it has hours just like Forex. Literally, almost identical to Forex. The only difference is that, like, I think 4 o'clock is the shut off time if you're gonna go through like a prop firm, which we'll talk about. So it's literally Forex hours. Okay. Let me see. I keep looking at the chat thinking I'm gonna get a ooh, ah, but I turned it off. Duh. Okay. Now, things to consider. Day trading is going to be the most affordable, and we're going to talk about that. So, a lot of people utilize different platforms to trade futures, but if you are wanting to trade this on your own, there are requirements. Okay, so day trading is the most affordable. If you are a scalper, you're going to love this. Let me open the chat real quick. Do I have any scalpers in here? Any scalpers? All right, awesome, awesome, awesome. You are going to love this. Okay. All right, awesome. Now, if you are going to swing trade, yeah, Courtney, it's just like trading SMCI. It's going to be the same thing. Literally, that same volatility, it's like trading that in NVIDIA and SPX. All right. So you don't have to hope to be a scalper. You can hope to be any type of trader you want. I just wanted to know who are my scalpers because I think this is going to automatically appeal to you. Okay. If you are going to swing trade, more capital is going to be needed. So that is something to consider versus Forex. With Forex, you could have a $200 account and you could swing an account for as long as you want. You will have some fees like your swap associated. But other than that, there really aren't any major fees, okay? With futures, completely different. You have to have more capital to swing, and that is contingent on the broker. There is high leverage, and it is very volatile. So it's very similar to Forex, okay? All right, here we go. Now, you have two options. You can trade with your own capital, or you can trade via prop firms. I don't make any money referring you to any prop firms. I want to make this very clear, okay? I don't need to do that, but I'm going to explain. You have your own brokers, and then you have prop firms. A prop firm is not your money. A prop firm is where you pay money to get access to funds. You have to pass a test or two in order to be in order to trade their capital, and you have to stick to their parameters in order to get payouts. Now, I will say that if you know me or you've watched my videos, I have been against prop firms in the Forex industry because I know too much behind the scenes. I have done my due diligence with futures prop firms, and I've done it with my top traders. And so far, it has been one of the best experiences. They've been paying out. They don't slip you on purpose. Like, it's really good, really, really good. And if you've been on my Instagram page, you saw that I passed a recent challenge. One of our students, I think he's on here, Chris, he passed a challenge. We have quite a few people that have passed challenges. They're really easy to pass, to be honest with you, and they're pretty affordable. So you have the option of using your own capital or prop firm, okay? With stock options, that's not possible because it is regulated and different type of contracts are involved. So it's hard for companies to get that regulated. This is different. You don't have weekly contracts, daily contracts. You don't have any of that. It's just by the expiration month. Now, tax advantages. If you are located in the US, there is a 60-40 tax rule. So 60% on your long-term investments and 40% on your short-term investment. If you trade stock options and you do not trade SPX, you are subjected to 100%. Okay. Now, I'm not a CPA. I'm not going to get into this long term. I'm not going to talk about this like in depth, but I want you to understand that there are better tax advantages to trading futures. And that's why you see a lot of millionaires do this. All right. Most important thing, margin requirement. This is what you need to know when you are going to have your own capital. So for your private accounts, the amount, you have your initial margin and you have your maintenance margin. Your initial margin is the amount of funds required on hand to enter a position. So for example, if you wanted to trade Forex, right, and you want to get into a certain position on a trade, you have to be able to cover that. Your lot size has to be able to cover that. Like, it's not going to just let you go in if you don't have the money for it. Same thing when you're trading futures. Okay, so you have to have your broker's initial margin amounts. Okay, and that's contingent on brokers. Every broker is different. Your maintenance margin is the amount of funds required to stay in the position. So remember I said swing is a bit more expensive. If you plan on holding trades or swinging trades, they're going to require that your accounts have more funds. So that is your maintenance margin. And this is why a lot of people like to utilize scalp trading. Because scalping, you just have to have the initial funds. That's it. Get in and get out. If you're going to hold it, you're going to need quite a bit of capital. Now, if you don't have enough to cover the funds, what happens is you're going to need something called a margin call. I don't know if any of you have ever done this with Forex, where your broker says, hey, you're over margin, and they'll pull you out of the trade. Or sometimes you get pulled down and you're like, what the heck happened? Well, it's because you exceeded your free margin, and that's it. Like, you can't, they're not going to let you still continue to trade. So when that happens with futures, you're going to get a margin call from your broker, and they're going to request for you to deposit more money, or they're going to pull you out of the position. So you definitely need to be more responsible with your trading when trading futures on a private account. Now, with private accounts, what I have done here, because I know people are going to ask me, and I'm not going to sit here and answer everybody individually. So what I have done was I did my research to let you know what the margins are. They have your initial margin, your intraday margin, your overnight margin, and your maintenance margin. So these are what some of their fees are if you are wanting to hold a trade overnight. I put this QR code here for you to be able to scan it, and it should take you to this page. If it doesn't, for whatever reason, you can Google TradeStation margin fees. So your broker plus margin fees. Everybody with me so far? Type of 1 if you're with me. It worked. Thank you. Thank you. Thank you. Thank you. I appreciate you letting me know that. All right, cool. All right, so next one. We have Tradeovate. Tradeovate is who I personally actually use TradeStation and Tradeovate. I have private accounts for TradeStation. But Tradeovate, these are their fees. So you can see where you have different, and these are not all of them, you guys. You can trade a whole bunch of other things, like a whole bunch of other things. I couldn't get it all to fit on here. That's why I included the QR code so that you can scan it and you can copy it. So I'm gonna, or whatever, click on it. So I'm gonna leave it here for a minute. Go ahead, scan it, and then just let me know you got it, that it's popped up, so we can proceed to the next one. So everyone should have gotten the first one. This is Tradeovate. And you can see where they do require a little bit less margin. They don't require as much margin, okay? All right, awesome. And then there's also interactive brokers. Now, if you are part of my stock options team, you already know about this broker. Especially if you're international. If you are using something like Schwab or interactive brokers for futures, most of them are going to require a margin account and at least $2,000 in your account. I know for sure that is what it is with Schwab. And the thing is, if you go under 2,000, they're going to contact you to put more money. So it cannot go under $2,000 if you're with Schwab. All right, so that's for private accounts. Now, we're going to compare this to Forex, okay? With Forex, you have your lot sizes. With futures, we have contracts. Now, if you're a part of my stock options team, you're already used to hearing the word contracts, but we have contracts. So If you buy one contract, that's equivalent to basically just one position. That's it. There are no 0.01s, 0.02s. We don't do any of that. It's one position in there. You purchase two contracts, that's two positions. So that's that. Now we use ticks instead of pips. Not for all, but for some, and I'm going to give you NQ and ES as an example because these are the most commonly traded ones, and gold too, but I'm going to give you these. In NQ and ES, a 1-point move is equivalent to 4 ticks. Write this down. So with NQ and ES, a 1-point move is equivalent to 4 ticks. So normally when you're trading like your NASDAQ or, you get 170 pips, right? 30 pips, 40 pips. Well, it's a little bit different because each pip is equivalent to 4 moves within that pip. So we will say that there are points, but there's 4 moves inside that point. And this is for NQ and ES. Not all of them are like this. Okay, so your point is going to be the smallest amount to the left of the decimal. So these are going to be your points when you're reading it. Your ticks are going to be to the right of the decimal. So if this changes from 54 to 55, we have moved 1 point. That's equivalent to 4 ticks. If we move this from 0.03 to 0.04, that has moved 1 tick. What stockbroker can I use in Nigeria? We're not talking stocks. We're talking futures. Get on subject. Okay? Everybody with me on that? So your points are to the left of the decimal and your ticks are to the right of the decimal. Perfect. So 1 point for NQ and ES is equivalent to what, team? Four ticks. All right, perfect. Perfect. Okay. Now let's get to the money, right? So I have this beautiful sheet here that you are welcome to screenshot it. So go ahead and screenshot it before I start going over it. Let me know that you've got this. Trust me, you will want this because having to look for this is a pain in the butt. Now, this is not all of them, but these are a couple things that you can research. So you can see I have our equities here, which are most commonly traded, which is our S&P, our Dow Jones, our NASDAQ, our Russell, right? We also have our bonds. We have metals, which is gold, silver, and small precious metals. We have crude oil and natural gas, corn, wheat, soybeans, and then you also can trade the Forex market, but in futures. All right, so this is so cool. Now, the ones that have a 0.25 right here under minimum tick size, those are going to be the ones that have 4 ticks and 1 point. Okay, so if you see anything with a 0.25, that equation that I gave you of 4 ticks and a 1 point move, that applies to that. Now, don't worry, you don't have to do the math because I just gave you this beautiful chart and you don't got to worry about it. So right here, you can see where if I trade the S&P, it's going to cause, I'm going to make $12.50 per tick. There's 4 ticks in 1 point. So how much is a 1 point move going to make me with the S&P, guys? I know you weren't probably expecting to do math. But yes, $50. Correct. Great job, y'all. Okay. Now this is for the big dogs. So we have something called minis, which are the large contracts, and that's going to be this one. And then we have something called micros, which are the smaller contracts. Write this down. 10 micros equals 1 mini. 10 micros equals 1 mini. So if you're going to start this off, I want you to start with micros. And how do you know if something is a micro? Well, when you go to TradingView, this is where you're going to type in the name of the whatever instrument you want to trade. If it has an M in front of it, that is a micro. That is the smaller one. Now it's going to pay significantly less, but trust me, you want to start there because literally a 1 point move in the wrong direction will have you lose $50 with ES. So if you cannot afford that, you don't want to do that. If you are part of my stock options group, think of this is SPX, and think of this like SPY, pretty much. Even though we make more money trading stock options, but just a comparison. So if you wanted to start off slow, which is what you should do, you're going to look at this right here, right? So one paid $50 point per point move. Your micros are going to pay $5. So for every point your mini, or excuse me, your micro ES moves, you will make $5 opposed to $50. Are you with me? All right. Okay, awesome. Awesome, awesome, awesome. Now, how many of you like to trade US 30? Do I have any US 30 traders in here? Yes, all right. So that's going to be, if you go to your computer, it's going to be your /YM, and that's going to be for the mini, which is the larger contract. I know it sounds like what? A mini, but it's larger, but that's just how they word it. I have no control over that. And then your micro is going to be MYM. I do want to make this disclaimer. There is a possibility that you will have to get SIBO exchange data from TradingView. It's like $3. I pay for all three. I pay $9 per month for it. So just so you know, if it shows you that you're not getting real-time data, you will have to pay for that, and it's like $3 extra. I have all of them because I teach, but that's it. You could just add it to your plan. Or your broker might just have it and you don't have to do it. All right, so you can see where if you're trading it on a larger scale, it pays $5 per tick. So that means that that's it for this one. Remember, it doesn't have a 0.25. If it had a 0.25, then that would be $20. In this case, it's $5 for each point. Each point, that's it. $5. Okay? So that's with that. Now you can do 50 cents as well. All right? Now your NQ is what I primarily trade. That is compared to NASDAQ. This is a very volatile entity to trade. Very volatile. It pays significantly well. I'm gonna make that super duper clear. Like, it's amazing. And this one does basically $20 per point or $5 per tick. If you go with your micro, right, it's going to pay 50 cents per tick. So essentially $2. So you'll be making $2 per point. And this right here breaks down all of them for you. Okay, I'm going to proceed to the next. Now, similarities. NAS, right, or US 100 is the same thing as trading your NQ, or M as in Michael, NQ. US 500 is going to be the same as trading ES, or M as in Michael, ES. US 30, same as YM or MYM. And gold is going to be GC or MGC. Gold pays $10 per tick, just so you know. I trade this one as well, but it has to always be an A1 setup. So like when Idris gives you his fire trade ideas, what you can do is compare it. Compare them side by side, and you'll be able to see, okay, cool. And I'm going to show you on how to calculate the ticks on TradingView as well, because it's a little bit different. But you'll be able to utilize what our amazing providers are already giving you, but you can also trade it in the futures platform. Anyone excited? Please tell me y'all are excited, because I think this is freaking amazing. Like, now if you've already been doing this, I understand, but come on, y'all. Like, you just literally are adding another way to earn to your portfolio. And I'm gonna tell you right now, you do not need to pay for any type of training for this. I am doing this for free for you guys. CME also has a free training on it, which goes over like how futures works. And all of the education that is provided through Economy will get you what you need in order to do great. If you do binary options, you're going to be really good at this because you're used to scalping. So this may be something that's going to be super easy for you, right? And it's going to take practice, but you have everything that you need. All you need to do is understand how the structure works, how to get paid, how do I get an account? That's all you need. So don't sit here and start paying people for education. Do not do it. Don't do it, you guys. Do not get suckered into that. Yeah. Of course, it's new. Yeah, being overwhelmed is completely normal. So if you are a newbie and you're trying to just learn how to trade Forex or just learning how to chart, you have to wait to do this, okay? But there's nothing wrong with understanding it and saying, once I get, like, I understand what's going on, I want to look at this next. That's the point of this, is for you to decide if this is something that you can practice. Yes, there are demo accounts, and you can also paper trade it in your trading view as well. This is international. This is just like Forex. It should work everywhere. Okay? All right. Now, if you like to trade Forex pairs, guess what? They have futures. Now, this is not all of them. I've already given it to you, but I also have a much nicer one. If you like to trade Euro, that's going to be 6E. If you like to trade the British Pound, that's going to be 6B. The Yen, 6J. The Canadian Dollar, 6C. The Aussie, 6A. So that's how you would enter it into your broker or into your trading view, and it will pop up for that contract. And what you're going to do is you're going to select the month that it applies. And it's not going to be every single month. So like, for example, well, we're going to get into that. Let's get into it. Contract month and year. So there are codes, okay, guys, for each month. And January is labeled as February is G, and so on. We've been trading June contracts since about April timeframe. June contracts are about to expire. So now we will we will roll over to the newer contract, which I think is going to be September. So after the middle of June, we will then start trading NQ futures for September. Okay. That doesn't apply to, like, that's not going to hurt you in any way or whatever, but that's how it works. So for example, I'm going to be trading NQU 24. That is basically a September contract for 2024. And that's going to have most of the volatility because that's when most retail traders are going to be trading. So you'll get a notification from your broker that it's time to roll over to a new month. And that's letting you know, like, hey, it's time to transition to the next contract. And I'm going to show you also on TradingView how that looks. But please screenshot this. You're going to want this. So just let me know once you screenshot it. All right, cool. All right, same thing right here. You see how we have NQM24? It's an NQ contract. It expires June 2024. ES, June 2024. And NQU expires September 2024. So you're going to see they look like this. We'll tell people we're just trading NQ and ES, but when you're actually trading the contracts, that's what it's going to look like. Or if you're trading a micro, they don't have an M in front of it. So it'll be MNQ. MES. Okay? All right. How to calculate risk to reward. So let's say you want to trade NQ and you average 35 ticks for a stop loss, which is 8.75 points. Remember, 4 ticks in each point. You can multiply 5 times 35, right? Because it pays that. And that's going to be a risk of $175. Now, keep in mind, this is for trading NQ. So I'm going to risk $175 and then whatever my goal is, like for example, today I got 194 ticks. So I made quite a bit of money. All right. And I do an average of 20 to 35 ticks for my stop loss. Personally, that's what I do. Okay. It says you plan on taking a 90 tick trade with NQ and it hits your take profit. What did you make? Well, it's $5 per tick, right? So 5 times 90 is going to be a $450 profit. You guys see that? I just multiplied the ticks by the amount of risk that I was going to choose. This is how I do my math. There is another way that I'm going to show you. I feel like it's more complicated in my opinion. I like to multiply my ticks by my risk and my ticks by my reward. Like for me, that's the easiest math equation. Just like Forex. Okay? Everybody got that? Cool. Now, here's another way that people calculate it. I don't use this method, but I am going to share it with you. Basically, you can do your position sizing, which equals, this is how you would position yourself, the amount of money you want to risk divided by the contract value per point, not per tick, per point, and the points of risk. So I don't do this personally, but I put this here for you guys if you want to screenshot it and you want to utilize this. So for example, let's say I'm risking $400 on a 10-point move, on a 10-point stop loss with NQ. I get in there, 400 divided by 20, right? And then I divide that by a 10-point stop loss. And that tells me that I can get in with 2 contracts. I think it's easier the other way. So remember, 2 contracts of NQ, or I could do 20 contracts of MNQ. Everybody got this screenshot? Cool. All right. Now we're going to talk about prop firms. So how many of you know what prop firms are? 1 for yes, 2 for no. Okay, so like I said, I personally am very pleased with the prop firms that are out there for futures. I only work with 2 that I'm going to personally talk about. There are others that are out there, but they are not as reputable, and I have seen some things that I don't like. I have been working on this for quite some time. If you want to try them out, you are more than welcome to try them out. I am not saying these are the only 2 that you have to go through. I just have done my testing with my team on these 2, and it's been great. And we've only had 1 issue with not getting a payout. And once we spoke to them, they issued a payout. So customer service was great. And this is not with TopStep, it's actually another company. But I primarily like working with TopStep. So what happens is you pay for an account. And at the time they didn't have a special, but I pay $50 per month. You pay $50 per month until you pass. So you pay $50, and then they give you access to a certain size account. So $50 I think is like a $50,000 account. They have larger sizes. Your goal is to make $3,000 in the account, but you cannot lose $1,000. So you have to make sure that you're mitigating the proper risk. You're doing everything correctly. You don't want to just go in there and gamble. If you pass, you are now a certified funded trader. At that point, you're eligible to get payouts off of your trades. Now, there's rules to this, which I'm going to show you, but it's very simple. And what I love about it is that they already have licensing with the brokers, and you can connect it to your trading view. Now, they have a new one that has come out, a new platform that has come out that a lot of people like. I haven't used it yet. I use the one that just connects through TradingView, and it makes my life so much easier because I can just get in and out of trades like right off of TradingView. Their platform is also incorporated with TradingView, and you can do the same thing. Now, I use what I use because I trade multiple things. I'm doing my stock options, I'm doing a whole bunch of stuff, and I don't want to have multiple broker, or I just don't want to trade on multiple platforms. So it's easier for me to do that, but you'll need to do what works for you. They are always running specials. They were doing like $19 accounts, or somebody was doing $19 accounts. They allow you to use copiers. They also have their own copier. So if you want to purchase like 5 accounts, which is the max, you can connect it to a copier and you can get funded for 5 accounts. So once you're funded, though, you do pay a one-time fee of $150. That's it. And then you're eligible for your payouts. You are no longer charged monthly. Okay, guys? So that's how that works. Now, these are the 2 firms that we worked with. It was TopStep and it was Apex Trader Funding. I have people that are with my teams, both private and via economy, that have been funded through these 2 and have had no issues getting a payout. One of our students from economy, her name is Anya. She has Apex. She absolutely loves it. She crushes it. She learned stock options with us. Now she's doing futures. She's killing it, you guys. Crushing it. With TopStep, these are the available products that you can trade right here for futures. And then this is basically their options. So like for a 50K account, you have to make $3,000. You cannot go over 5 contracts. 5 contracts is your max. Your maximum loss is $2,000. Your 100K account, you got to make $6,000, and so on. And they have more, I believe, but I could only screenshot these. And look, you have your gold, you have your micros, you have your minis. So you have everything there that they offer for you to trade in futures. All right. With Apex, they offer quite a bit more. So I couldn't take a picture of everything, but if you go to their site, you can click on every one of these here on the left and they'll show you what is available to trade. And they also have this. Now, even though they look more expensive, they are always running specials. I believe they were the ones that were doing like $20 accounts, you guys. So before you say, oh, I'm going to go do this, and you hurry up and you jump in and you want to pay $167 a month, do not go to their Twitter. Yeah, 90% off at Apex now. Thank you, Tim. Go to their Twitter, go to their pages. These guys are always doing specials. Always, always, always. Now, TopStep, $50 a month, to me, that's cheap. But like, they're always running specials. So don't be so quick to just pay full price, okay? Now, what did we cover? We covered that this is a volatile market. You do have the option of private capital. You do have the option of using prop firms. You also have position sizing, like you know how to do that. You understand, or you at least know what the expiration codes are. Our hours are similar to Forex hours, and the payout is absolutely great. Like, it's absolutely phenomenal, you guys. Okay. So for example, I was in this gold trade, gold came, got to my level, and bam, it took off, right? So for example, let's say that you got a trade idea from Idris and he says to get in at 23.38. This is a trade I did privately, okay? If you sit here and you look at gold, gold literally did the same exact thing. Now, you guys know how we have our tool here where we do this, right? You have to understand that the number here on the left, that is not the tick measurement. It's going to be this number here. So this is 244 ticks. This is a stop loss of 44 ticks. And you can double check it by double clicking on it, and you will see where ticks is labeled here. Okay? So for example, if you got into this trade, let's say you took it to here. Let's say you took it to here, you guys. Okay? 184 ticks. Well, how much money would you have made if it's $10 per tick? Correct, 1,840. So in this trade, you would have made 1,840. Now, 44 ticks is a big lot size. I don't usually use something that big. But if you were going to do that, you're risking $440 to make that. Now, if you don't want to do that, you can use the the micro version of it. So you click here on the top. And what you're going to do is you're going to type in MGC, and you want to make sure you have this either clicked on all or clicked on futures. Once you do that, you're going to click on this drop down, and it's going to show you the contract expirations. So this is the one for June. The next one we have is August, and we have October. So these are the different ones that will be traded. So if I click here on June, that's going to show me that contract. Well, this looks crappy on this one. Don't do it on this. All right, well, on your normal broker, it's not going to look like that. On here, when I trade this, I just keep GC open. If you want to do it on TradingView, do MGC. I can't believe it did that. All right, your MGC then if you're on TradingView. But on your broker, you should be able to pull up the contract and it's not going to give you a problem. So if you want to do this via TradingView, just type in MGC and you will be good to go. You don't have to worry about anything else. So you can see where it's the same thing here. Same exact price action. Everything's exactly the same. The only difference is that you're going to be making less money to get less money. And to connect it, you click on the bottom icon right here. You click on whatever your broker is, and you can, mine, this right here is through TopStep. Well, I'm already signed in. Dang it. But it'll pop, your credentials will pop up. You sign in and you're good to go. That's it. To be able to trade and have these features here, you're going to right click, go to settings, go to trading, and this is what I have turned on. So just so you guys can see, I have my profit. I have everything displayed in ticks. It will automatically do it in money. I don't like doing it in money because I don't like to look at my money. I like to look at my ticks. But I use it in ticks, so it basically I could just see like how many essentially ticks I'm in profit or how many ticks I'm not in profit. We also have these for oil. So for example, here's your micro oil right here. Here's your regular oil right here. Okay. You have your US 30, which is your YM. Now, I trade these on smaller time frames. If you're from my stock options group, we use smaller time frames. So for me, if I'm getting into this, I'm doing it on smaller time frames because I'm scalping. Okay. The NQs, I trade NQs. You can see my NQM. I was in this trade actually, but you can see where it's played out. This is my regular NQ. And then if you look, we have our micro NQ, which is the more affordable version to trade. So you have that here. And once you have it connected, you can literally just hit buy, sell, buy, sell. You also have the option of logging into their broker and trading via their broker. But if you don't want to try to figure out or learn a new system yet, it's so much easier. And I just want you guys to at least go into your trading view and check it out and see if it's something that you will even like attempt to mark up or look at. So just you can see here, look, 6B, British pound futures. I can trade my British pound futures here, right? So I can do that on here, which is really cool. And it pays, like I said, it pays well. So that is pretty much it.